Dr. Kim, thanks a lot for joining us today. So one of the missions of the World Bank is to end global poverty and increased shared prosperity. If you had to give yourself a grade, A, B, C, D, on how those missions, where that's at in terms of being accomplished, what would you grade yourself?
You know, there's some great news, Shraysi. I mean, we are now below 10% in terms of the number of people living in extreme poverty in the world. So we're down to about 700 million. And a huge part of that was, of course, growth in China. I mean, China lifted 600 million people out of poverty over the last 20 years or so. But now the low-hanging fruit are all gone, and it's going to be tough going. So for the last 700 million, we have to really focus on things like fragile and conflict-affected states. And unfortunately, the number of fragile and conflict-affected states is growing almost on a daily basis. So we are doing really well up until now, but the tough work is ahead. You know, if you just look at growth numbers, I mean, we would need relatively high growth rates for poverty to get down below 3% automatically. Now, what that tells us is there's a lot of work to do. We have to really get serious about lifting people out of poverty despite lower growth rates. So we're going to have to do things now that are creative, innovative. We're going to have to make sure that capital moves to the places that need it most. It's a difficult environment right now, but that's why we're here. That's why we are the World Bank, and that's why we work with all the other multilateral development banks, because our job specifically is whatever the growth rates are, we need to focus on making sure that the poor and the bottom 40% benefit.
The goalpost was, of course, ending extreme poverty by 2030. But if the recovery in these emerging economies is not as fast or accelerated as you'd like to see, do you think that we might have to revise that date at some point?
Not yet. The whole point of setting a target with an expiration date is that you've got to continuously change what you do so that you're on track. And so, for example, right now, what are the problems? Well, low commodity prices have affected growth in developing countries. The relative difficulty now of getting access to capital has affected developing countries, and also just instability has affected growth in developing countries. And all of these things, in addition to trade growth in trade being the lowest that it's been over now more than 5 years now at less than 3% growth. All of these things are affecting developing countries. So what we have to do is we've got to find ways of making access to capital easier for the developing countries. We have to help countries diversify. Those that depended on commodity exports now need to find other ways of creating jobs. And you know, it's difficult to increase trade just as an institution like the World Bank Group. But we know that the more trade there is, the more it benefits the poorest countries. It's almost a direct relationship. The poorer you are, the more trade will benefit you and poor people potentially. So we're working on all those fronts to try to work against the trends in the global economy.
One of the top global trends at the World Economic Forum last year was income inequality. Yet when we look at the gap between the rich and the poor, both in developing and developed economies, that gap has only been growing wider. What can be done to stem the widening of the gap?
You know, there are places in the world where, in fact, income inequality has gotten lower. So, for example, in many places in Latin America, inequality has decreased. You know, I think the figures that you see, the top 80 people in the world, have access to as much wealth as the bottom 50% of the world. I think the remarkable thing there is the bottom 50% of the world has access to only 0.7% of the wealth of the world. So it's not, it is very striking how wealthy the truly wealthy are, but it's also really striking just how little access to wealth the bottom 50% have. And so these are all enormous problems. Here's how we think about it. So, for example, one of the things we're doing is working on tax systems. Unfortunately, in most developing countries, tax systems are regressive. In other words, the poor pay more taxes than the rich proportionately. And if you're powerful enough, you just somehow don't pay taxes. And this happens everywhere. We've got to get rid of these regressive systems that are not transparent, that are not effective. And along with the IMF, we are now working to help developing countries improve their tax collection. Another part of it, of course, is making sure that entrepreneurs who are poor but who have good ideas have access to capital. So through IFC, our private sector group, we're trying to make available to even the smallest entrepreneurs capital so that they can build a business. These are all very difficult but extremely important things that we are now doing to work against increasing inequality. You know, for the first time in 2013, we set the tackling of inequality as a goal for the World Bank Group that we'd never had that before. So in every situation, we're looking for ways of going against the tide, making capital available, ensuring that people pay their fair share of taxes, you know, making the distribution of resources in a particular country more transparent. So for example, you know, when money is committed to a school, we have actually posted on schools who's supposed to be there, how much money was committed, so that the people of the community know and can hold governments, in this case, responsible. You know, this is core to what we do as an institution.
Dr. Kim, the latest data that we have on China shows that the Chinese economy is showing signs of improvement. What's your view on China at the moment?
You know, we have been saying the same thing since we wrote this report, China 2030, with the Chinese authorities several years ago. You know, this is an historical phenomenon that we just have to appreciate the significance of this. Never before in history has the second largest economy in the world decided that they're going to completely change their growth model from focusing on investment and exports to focusing on services and consumption. This is a huge shift. And there have been bumps along the road. We knew there would be bumps along the road. But if you see the things that are happening, indeed, the proportion of the economy taken up by services is increasing. Consumption is increasing. You know, there were problems over the past few months because people in the rest of the world didn't quite understand what Zhou Xiaochuan of the People's Bank of China was doing in adjusting interest rates, for example. But now they understand that they've got to communicate a lot better, and they are communicating better, and the markets are responding favorably. So we have felt all along at the World Bank, because we were involved in putting the plan together, we felt all along that this is an intentional, relatively controlled process where they're really, Chinese are going down a much more sustainable path of economic growth. You know, when I was last in China, you know, every 2 years or so, Premier Li Keqiang gives me a new assignment. And so we did the work on, of course, China 2030, then we did work on urbanization. Many of those reforms that were described in urbanization are being carried out. The reform of the hukou system, for example, is a huge issue that's happening right now. We recently have been working on healthcare, and now the insights that we've derived from the healthcare work are now going to be implemented in 3 or 4 provinces. The next assignment that he gave me was so interesting. He asked us, the World Bank, to work with Chinese authorities on looking at new drivers of growth for China. Now, you know, China is still responsible for 30% of global growth. And again, we just have to get in our heads how significant that is and how important that is. Are we worried about the slowing of Chinese growth? Of course. And you know, when I go to Africa, when I go to any of the developing countries, they're all asking, when is China going to get back to 10% growth? And I think the Chinese authorities have been fairly clear. That's probably not going to happen anytime in the near future. But the growth that they have now, because they've altered the course of it so significantly, but in a thoughtful way, that we all in the world have to get used to this new level of growth. But we think, along with the Chinese, that this is a much more sustainable path.
The new normal for China. It's interesting because you were talking about China being, being responsible for 30% of global growth. What we saw in December was that a tax cut in China led to a surge in global automobile sales. And it just indicates the power of China as a global growth engine. Do you think that that is sustainable for the rest of 2016 and perhaps even 2017?
Well, you know, we're watching very carefully, and so of course, you know, I think some of the signs this year are good, but you know, there is going to be an adjustment over time as the growth model changes. Now, you know, China does have a lot of fiscal space. Their government indebtedness is very low, and so I think you're going to see some measures that try to contribute to overall growth. Now, globally, of course, the picture for growth is disappointing again this year. The importance of China I don't think will get less. I think will continue to grow. But what I'm seeing is that China now is very much attuned not only to what's happening inside of China, but they're much more attuned to what they does in the world. The Chinese, much more than before, and I think this is very welcome, they now are much more aware of how their own policy measures, their own actions affect the rest of the world, and they're incorporating that into their overall strategy and in their communication especially.
After declining to raise rates in March, Federal Reserve Chairwoman Janet Yellen did say that the U.S. is on track to raise interest rates again this year. When would you estimate that to happen, perhaps?
None of us are sure. And the thing that Chairwoman Yellen keeps emphasizing is that every month there are new data. Every month there are new indicators that they're looking at. And so it will depend on what the indicators look like on any given month. So we're all following the same things. We're following the employment numbers. We're following the manufacturers. And all the things that we usually follow, we're following. I think the growth in the United States has been very firm, and we think it will continue. But she's not only looking at issues internal to the United States, she's also looking at the potential impact that this will have in the rest of the world. And from our perspective, that's very welcome.
When a rate hike does occur, what sort of impact is this going to have on emerging economies? Are we going to continue to see capital outflows, perhaps? Is this going to create uncertainty in the market? What is the impact of that?
So one of our biggest concerns, of course, is access to capital for developing countries. And during the 2012-2013 era, you saw countries like Zambia and Ghana, Ethiopia going to the capital markets and getting 7-year money at 6%. And this was a source of great pride, and understandably so. But that's not what's available now. And we're very concerned because access to capital is a huge issue. So we find ourselves doing a lot more guarantees. We're getting involved in trying to help specific countries access capital markets. Now, if the U.S. rate rises, it will be more difficult because you'll see more movement of capital out of developing countries. And so, we're now very much trying to play a very specific countercyclical role. Not the same one as the IMF. We're not focused on balance of payments, but for commodity exporters, we're really trying to help them in the short term with some infusions of cash, but all linked to specific structural reforms. That's how we work. Our loans are not just for balance of payments issues. They're around specific outcomes, development outcomes that we're trying to achieve. So yes, we're worried about it. I think access to capital will be even more difficult. I think the demand for our services is going to go up even more. It's already very, very high right now. It's going to go up even more. And I think all of us in the international financial institutions are going to have to step up as the Fed raises rates.
We know that emerging economies are not doing as well in recent years. In fact, this is reflected in World Bank lending. A recent World Bank press release actually says that lending is at levels not seen outside of a financial crisis. That sounds pretty bad to me. How would you describe the scenario?
We've seen increased demand in really two forms. So on the one hand, especially the commodity exporters are now coming back to us and asking for help. And this is for money for infrastructure investments. It's for money that goes directly into their budget support instruments that support structural reforms. But we're also seeing demand on another level. So the global community has asked us to step up in terms of fighting pandemics. They've asked us to step up in terms of tackling climate change. And now we're very involved in tackling the forced displacement crisis, refugees. So there are two levels of increased demand, and we feel ready to step up to both of them. We will always maintain our country-focused model. You can't tackle pandemics, climate change, and forced displacement outside the context of individual countries and regions. So we'll always have that same working model, but we now feel that finance is a critical part of stopping an epidemic from becoming a pandemic. We think that financing is critical, for example, in helping countries move away from coal-based energy, for example, to cleaner sources. We think now it's also really critical that finance is going to play a much, much larger role in dealing with fragility and conflict in places from where the Syrian refugees are exiting the Middle East and North Africa and moving to Europe.
Dr. Kim, a lot of this World Bank lending, if you could identify some of the big countries where this money is going to, what are those countries and where in particular is that money going to?
There are some new countries that have come on board now that weren't borrowing from us before, like Angola, right? Angola, another oil exporter, hasn't been borrowing from us for a while, but now feels that need. Throughout Africa, there's a huge demand for resources. Again, part of it's because so many of the African countries were dependent on commodity exports. Latin America demand is also very high because while many of those economies have become more diversified, still the rapid growth in Latin America over the last 10 years or so was related to the commodity boom. And so those countries now are borrowing more from us. And also, if you look at Zika, it showed again that we're still not ready. And so, the work that we need to do in preparing financial instruments that will release immediately upon an epidemic, and the work we need to do to develop the health systems in the developing countries, that's going to require a lot of capital. We're seeing right now countries that are on the verge of having to make a choice, renewables versus coal. And we can bring down the price of renewables, but we need some capital to be able to do that. And I think the demand for our services, for our capital in the Middle East and North Africa is going to continue to go up and go up very rapidly. I mean, just imagine once there's peace in Syria, there are estimates that it'll be hundreds of billions of dollars required to rebuild Syria. How are we going to do that? I mean, I don't think that the traditional financing is going to come from the Gulf Council countries. I mean, the low price of oil has really hit them hard. And this is Saudi Arabia, Kuwait, UAE, the big oil exporters. And so I think our role there and into the future is going to be quite large, and the demands will, I think, continue to increase.
When you met with German Chancellor Angela Merkel last week, what were some of the things that you guys discussed? And did you get a sense that there is a consensus amongst European leaders as to how best to tackle this refugee crisis?
During the press conference, I paid tribute not only to the German people, but to Chancellor Merkel. I mean, they've been extraordinarily generous. There is a global pact that everyone has agreed to that when there's a refugee crisis, that all of the countries would share the burden of receiving them. And Germany has done so much more than their share in this regard. I think everyone's struggling to find solutions to this particular problem. There were 1 million or 700,000 last year. They're thinking there'll be more than 1 million this year. As the weather warms up, as the seas become calmer, there are going to be more and more people coming. This is a fundamental crisis for the European countries. And so what we're trying to think about is how can we be as innovative as we possibly can, utilizing our resources as creatively and effectively as possible to get at the core of these issues. And so I visited with the Secretary General Ban Ki-moon. We visited Jordan, Lebanon, Iraq. We also visited the capital of the Kurdistan region, Erbil, and then we went to Tunisia. And in every one of those situations, what we saw was that they were very worried about their young people. I mean, there's fundamental instability still in Iraq. Tunisia is a great success story, but if you look at the situation in Tunisia, first of all, the highest levels of unemployment are among college-educated young people. And a big part of it is because they do not trust the private sector. The private sector was where crony capitalism was at its worst in Tunisia, even compared to other countries in the Middle East. And so the young people don't trust the private sector. They want a government job. But the government is just at the very limit of how big they can be, 14% of GDP. So what do we do there? Now, a very important a source of jobs is the tourism industry. But with very focused terrorist attacks, the tourism industry collapsed. It's down something like 70%. From our part as an institution, we work in the public sector, we work in the private sector, we put deals together, we help to lower the cost of finance by providing guarantees and so many other instruments. There's a lot of work to do there. I think the one thing that all the European leaders agree on is that we have to go upstream. We have to go to the Middle East and North Africa and see if we can build stability, growth, optimism, and some form of prosperity that's more widely shared on the ground if we're going to tackle the problem of refugees leaving.
Dr. Kim, it seems like the two regions that are quite heavily affected by the migrant crisis are the Middle East and Western Europe. Asia has helped monetarily, but is there a greater role for Asian countries to play, or is this predominantly a Western and Middle Eastern problem?
Well, there have been some efforts on the part of East Asian countries. I would love to see more effort. I think that Japan is really now going to be stepping up. We understand and we welcome that. China has already made some pledges, and we are anxious to work with them. But this is not just a Middle Eastern problem. In fact, if you continue down the continent of Africa, I mean, the Sahel is potentially very unstable. There's a lot of terrorist activity, extremist activity in the Sahel region. Of course, the Horn of Africa, is another place where there's a lot of terrorist activity, and it could move south into Africa. But the other worry, of course, is that if those countries become very unstable, refugees from those countries could also start to move northward and potentially into Europe. So this is not a localized crisis. This is a global crisis. In fact, there are refugees coming to the United States from Central America because of violence in Central America. So it's not even limited to one hemisphere. This is something that concerns everybody.
The Asian Infrastructure Investment Bank officially opened for business this year in Beijing. Last year you hosted the AIIB president, and this year they're all here again for the spring meetings. What sort of collaboration is going to take place between the World Bank and the AIIB, and can you perhaps shed some light on what your first project may look like?
So we'll sign an agreement. Jinli Jun and I will sign an agreement during these meetings, and we've been working so closely from the very beginning. The AIIB is still working on staffing up. So one of our vice presidents actually went to AIIB to become a vice president there, Joachim van Amsberg. So we're very much aware of what's going on over there. I think the first collaborations will be joint funding of projects. So right now AIIB doesn't have the capacity to do all the project preparation, prepare procurement agreements, for example. These things can get very complicated. And because they don't have the staff, I think what they're going to do is co-invest with us in various projects. So we're looking at a bunch of different ones across the AIIB definition of Asia, which is very large. But I think that at least the first few investments that they do will be either with us or with the Asian Development Bank, and we're looking forward to that. I mean, as I've said over and over and over again, there is a huge need for more financing for infrastructure, and we welcome AIIB's involvement in our projects. Now, one of the things we've done is that there's a group of us, multilateral development banks, that meet on a very regular basis, 3 or 4 times a year. And so we've now invited both the Asian Infrastructure Investment Bank and the New Development Bank to join that group, as well as inviting the Islamic Development Bank to join the group. So we have a larger group now, 9 of us. But given the problems I just talked to you about, climate change, pandemics, refugees, we need to work together much, much more closely so that we can begin to approach the level of investment that may actually lead to stability. I think one of the things I'm very worried about is that all of our efforts have been so small that they probably never reach the scale to build stability into fragile and conflict-affected states. And so now we've got to think about how do we really raise our aspirations, invest even more so that we have a chance of building some stability in places that have been very unstable.
You're the first World Bank president who does not come from a financial or political background. You're a physician by training, an MD. What's harder, being a physician or being a World Bank president? And are there any transferable skills there?
I loved being a doctor. I really enjoyed seeing patients. But being the World Bank president, I just can't imagine a better job, certainly for me, because not only do you get to learn all these new areas, I mean, I learn about finance and macroeconomics, of course, but I also learn about road building and bridge building and energy. I get to learn about everything. So for someone who's been a student all his life, getting to learn all these new things is fantastic. But you know, as a doctor, you treat one patient at a time. But if you can grow an economy, I mean, you lift up literally hundreds of millions and sometimes even billions of people. So as a person focused on human suffering, as a person who grew up and trained focusing on relieving human suffering, being the World Bank group president is the best job I can imagine.